Hello, today we are going to talk about European shares. This morning, European stocks are down 0.3%, with oil majors weighing on the index and real estate stocks rising. However, the soft opening of the Stoxx 600 is still insufficient to erase the index's seventh weekly gain of approximately 0.4%. Area-wise, land is making the greatest additions, up 1.1%. While oil and gas is the most awful entertainer, down 1.8%. With a 0.9% decline, basic resources is also struggling. The index is being weighed down by oil majors Shell and BP, which are both down 2.7% and 1.9%, respectively. The UK's FTSE 250 mid-cap index is up 0.35%, helped by AJ Bell shares, which are up more than 10% since Jefferies upgraded the investment platform to buy from hold. Additionally, miners and oil are weighing on the FTSE 100, which is down 0.4%. The dollar's bull run may be coming to an end, as it just finished its worst month since 2010. Mortgage rates and 10-year Treasury yields have both fallen more than 50 basis points and erased a significant portion of the tightening since the Fed raised rates by 75 basis points in November. Following yields lower, the dollar is going towards the end of the week down intensely on the yen for the week and looking at more modest misfortunes on the euro and most different monetary standards. The U.S. jobs report on Friday morning will be the next test, and a negative surprise could push the dollar even lower. Last month, roughly 200,000 new jobs were added, according to economists. If it goes above that, it might restrain the bond rally and halt the decline of the dollar. Until Japan, where gains in the yen provided an excuse for profit-taking in the stock market, and the Nikkei dropped 1.7%. Markets in Asia were treading water and clinging to optimism regarding China's reopening. The Hong Kong dollar USD HKD has moved from the weekend to the middle of its trading band as a result of stock buying, skyrocketing local rates, and the decline in the dollar. Important developments that may have an impact on Friday's markets. Economics. Germany's trade data for October, Eurozone producer prices for October, and U.S. non-farm payrolls for November. European stocks appear to be struggling for direction this morning, with futures on the Stoxx 50 flat, and neither the FTSE 100 nor the DAX futures veering much in either direction. This might encourage the Federal Reserve to slow down the rate at which it raises interest rates this month, which could give the recent equity rally more support. The Pan-European Index is still on track to achieve 7 weeks of gains in a row. The Statistical Office, INS, reported on Friday that industrial producer prices in Romania increased by 41.1% year-over-year in October as a result of robust price increases in mining and utilities. The year-over-year increase in Romania's industrial producer price index was 46.7% in September. According to preliminary data provided by the INS, industrial producer prices increased by 2.2% in October, compared to a decrease of 1% in September. In October, industrial producer prices increased by 53.77% year-over-year on the domestic market, while prices on the external market increased by 17.09% annually. Despite a dip on Friday ahead of U.S. jobs data, European shares appeared poised to record their 7th consecutive week of gains as concerns about global monetary policy tightening eased. After 2 days of strong gains, the Pan-European Stoxx 600 index dropped 0.3%. Financial and energy stocks were among the biggest drags on the broader index, which fell further from Thursday's June highs. After sessions, which appear to be mostly characterized by risk-on appetite, there appears to be some profit-taking. Gains have been driven by optimism regarding China's economic reopening, stated Interactive Investors Head of Investment, Victoria Scholar. During protests in the country this week, Chinese officials loosened their stance on strict COVID restrictions that have hampered global growth. The Stoxx 600 is expected to gain for the seventh week in a row, its longest run since April 2021, and is on track to gain about 0.5% for the week. However, there is a little more caution today with the news of a potential cap on Russian oil and amid nervousness toward the closely watched U.S. jobs report, Scholar stated. However, there is a potential cap on Russian oil. In the United States, economists anticipate that about 200,000 new jobs will be created in October. Any decline will be seen as evidence that the Fed's aggressive tightening has been effective, bolstering the case for a more restrained stance from the central bank. Additionally, Horizon, which has a market capitalization of approximately $18 billion, is in discussions regarding potential takeover offers with Amgen Inc. AMGN and the Janssen Global Services division of Johnson & Johnson. Infineon IFEX and B Semiconductor Base I, two chipmakers, both experienced modest gains. Thank you for watching. For more financial news and info, don't forget to hit the like and subscribe buttons.